If you don't know who Tom Lee is, this guy is a Wall Street strategist who absolutely nailed 2023's stock rally. And he's now calling for a 170% increase to the S&P 500 to 15,000 by the end of this decade. If you've been following me, I've invested $5 a day into the S&P 500 every single day since January 2022, and I'm going to keep this going. But if this guy's right and the S&P 500 soars to 15,000 by 2030, I'm going to share what my $5 a day is going to turn into, and it's looking pretty good. So stay tuned for that. If you look at this article by Fortune published on June 13th of 2023, that's a year old, right? This guy comes in saying he thinks the economy is actually slipping into an expansion, not a recession. He claims by the end of 2023, the S&P 500 would jump more than 20% to 4,750. Now, you got to keep in mind, back then, a year ago, back in June 2023, the S&P 500 was around 4,400. And there are continuing worries at the time about inflation, if the Fed is going to continue to raise interest rates, and a lot of doomsday people coming in and saying that recession's on its way. Get ready, get excited, right? It's bad. But then there's this guy being a permabull saying we're going to the moon. But he was right. December 2023, we end the year none other than 4769, which was right on point. Then, in May of 2024, just recently, he comes out saying that he continues to see strength in the market so much, he claims we're going to see 5,500 by the end of June 2024. Well, on June 18th, we hit 5,487. Let's call it almost very close to 5,500. And even if we don't quite hit that, this guy seems to be right more than he is wrong. So to claim 15,000 S&P 500 by 2030 could be highly successful. But what is his thesis on this anyway? And what if we are in a bubble that is actually about to pop? That's something we need to keep an eye on. Now, see, Tom Lee explains this by saying that the adoption of AI is staggering. That's what's making it happen. And he believes that we're actually underestimating how much revenue all of these companies are actually going to make with AI. And he compares it to cell phones and how people viewed them a long time ago in the 90s as toys for the rich people. So if we look at that, the cell phones, they start off slow and they just ramp up. Well, that's because Wall Street was slow to adopt that. But the people that got in early enough, they got to ride up a very nice return. But now in today's environment, we see Nvidia currently leading the way and pushing the S&P 500 up higher and higher. And he's claiming that with the concentration in technology and AI stocks currently driving the S&P 500, there's a lot of fear that we could see the AI bubble about to pop thanks to Nvidia. But see, Tom Lee is downplaying all that. And he's sharing very specific examples relating the AI boom to the old dot-com bubble. And he thinks, no, it's not related at all to the dot-com bubble. And here's why. First, Nvidia has had a much steeper competitive advantage than Cisco and all of those companies during the early stages of the internet boom in early 2000. Second, unlike the dot-com bubble back then, there is a current lack of overly hyped IPOs today. In the early days of 2000s, IPOs for new internet sensation, they were popping up left and right, all over the place. And today, we're not seeing that happen as much, really not as often, and really not at all compared to the small spike in 2021. Third, with the adoption of AI, we're also facing a global labor shortage. And funny enough, we're actually seeing a population decline. So if you put those two things together over time, by the end of the decade, Lee's estimating the global labor shortages equivalent to 40 million workers. That equates to about $3 trillion worth of wages. And the automation that is needed from hardware from the semiconductors means whoever is supplying those chips could potentially see $2 trillion in revenue. And this goes to why I'm also focused on that ETF SMH. And I did a video about that, and I'll link that one down in the description so you can watch that one next. But that demand for semiconductors for the AI boom will continue to push technology higher, including Nvidia and so much more. And that would then be a win for the S&P 500 and everything else. But see, even Tom Lee isn't the only strategist feeling bullish right now. Ed Yardeni is predicting a roaring 20s super cycle, and he thinks that the S&P 500 could jump to 6,000 by next year in 2025, and then by 8,000 by the end of the decade. Now, of course, that's not as high as what Tom Lee was predicting, but it's still a positive signal. Let's keep an eye on that over the next year. But see, with my $5 a day investment into VOO, which is an ETF that tracks the S&P 500, if we do see Tom's 170% prediction in the next 10 years, let's see what things would look like with that growth. So this is the Google Sheet of investing $5 a day, right? You're doing $5 a day, and we're thinking for the next 10 years, that's going to put us into, 2034. So I don't know, we'll say maybe, we'll say 6 years, because that'll bring us into the end of the decade, into 2030. But if we invest $5 a day for 6 years with a total return percentage of 170%, that grows me up to $29,000. That's only with $5 a day. That's not a whole lot of money. That's only about $150 a month. So think about that. This is an opportunity that if you're not investing at all, first of all, make sure you subscribe and check out my entire playlist on the $5 a day challenge so you can follow along with me to see if this actually works out or not. When I come back and I do my video in 2030, because you know I will, giving you an update on my portfolio, will the portfolio show a total return of $18,000 with a total balance of $29,565? Mark this video down so that way you can say you were right or you were wrong, or should we say Tom Lee was right or Tom Lee was wrong? We'll find out. But see, here's the magic behind all this. You have the power and the control to do whatever you want. The thing is, the S&P 500 is the top 500 companies, right? So if you're bullish on the stock market and the future of American innovation, go a little bit higher than $5 a day. So for example, right now the average car payment is $700 a month. If you could find a way to buy a car in cash or pay off your car loan and take that money that you're putting toward your car loan at $700 a month into the S&P 500, if you take $700 a month, you multiply that by 12, and then we divide that by 365 days, that's $23 a day. So if we invest $23 a day for the next 6 years into the S&P 500, given Tom Lee's prediction, you would have a total return of $85,000 and a total portfolio of $135,000. If you want $1 million, keep driving that upward. See, the power is in your control of how much money you can invest. Because if Tom Lee is right with the S&P 500, we're setting up to make some incredible gains in the future. See, the thing with the S&P 500 is every time you invest in something like VOO, your money is going toward the top 500 companies in America. And these companies will come and go. They have in the past. We see here when GE and ExxonMobil once led the way, now replaced by Microsoft, Apple, and Nvidia. As companies roar in with new innovation and new technology, the S&P 500 that benefits. When companies aren't doing so well, as long as the stock market overall stays strong, those companies that aren't doing well, they're going to die off and be replaced with stronger, better companies. That's the beauty of the ETF investment. That's the beauty of the S&P 500. So to learn more, you got to check out this video next, and we'll see you on the next video.